Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Boothra. And the top stories this Thursday afternoon are: markets recover from opening lows. U.S. Treasury Secretary Janet Yellen rules out a backstop for all bank deposits. Fed Chair Jerome Powell tempers rate hike expectations. FMCG, private banks, metals lead, while IT is the key drag.
The government floats an offer to sell up to 3.5% of its over 75% stake in Hindustan Aeronautics at a discount of little under 7%. The stock slips on the discounted sale.
Coromandel International gains after announcing its foray into specialty and industrial chemicals. The company will invest 1,000 crore rupees into the new CDMO business over the next 2 years.
GR Infra surges in trade as the company emerges as lowest bidder for the Bang multi-purpose project in Arunachal Pradesh and the NHAI tender for 6-lane highway project in Maharashtra.
Global Surfaces makes a strong D-Street debut with a 17% premium versus the issue price of 140 rupees. The stock continues to gain post-listing.
Okay, those are the top headlines at this point in time for the markets, at least holding on to that 17,190 mark on the Nifty. We have seen some recovery from the lows. Whether that sustains or not is the question now. The mid-cap side of things, they continue to languish. So that index, though has recovered, of course, a fair bit from the lows, is still in the red, down 13 points on the mid-cap index. And in last couple of minutes, it has gained some ground as well. Bank Nifty too, doing well. That's an outperformer. But at least, Reema, we are not seeing what we saw in the global markets that fell after this testimony that came in from Janet Yellen and not Jerome Powell this time.
Yes, absolutely. You know, we've been talking a lot about the global market, but just want to point out the Nifty is now approaching 17,200. Yesterday, the intraday high on the Nifty was 17,207. So as we speak, we're just about, 17, 18 points away from that level. And if we cross that, I think there would be some more bullish upward momentum in the market. So 17,207 is the level you should watch out for. That was the intraday high on the Nifty yesterday. And we are getting closer to that level as the markets continue to gain ground. The advanced decline ratio right now has just about turned in favor of the gaining side. Let's talk about more of these stocks. Midcap Movers is up for you next. Vivek is here with the big list. Vivek.
Well, thank you for that. While the benchmark has actually gone ahead and recovered, the mid-caps continue to underperform, at least for the time being in today's trading session. Some stocks, mainly buzzing on the back of news flow, positive news flow. GR Infra projects, HG Infra on the back of, order wins that the companies have got. Both of these infra stocks are buzzing in today's trading session. Precision Camshafts on very strong volumes today has seen a very strong breakout. Sun Pharma advanced, on the back of publishing the results of a study yesterday. This particular stock is up almost 9% in today's trading session. Cement stocks, especially the small and mid-cap names, are seeing quite a bit of traction. Sanghi Industries is up quite significantly for the past couple of trading sessions. Moving on, some of the stocks that are seeing significant volume action. Star Cement up almost 6% in today's trading session. Landmark Cars, after a brief period of underperformance, has recovered quite significantly. Spencer's Retail and Aegis Logistics up today on very strong volumes. On the other hand, some of the stocks that are mainly seeing a bit of profit booking, Shipping Corporation of India down almost 3.5%. Page Industries down on strong volumes. Max Financial, after yesterday's very strong outperformance, has given up most of the gains that it saw yesterday. And Berger Paints, up down on strong volumes in today's trading session.
All right, that's a long list. Well, thank you so much, Vivek, for getting us up to speed. Those are some mid-cap movers. With that, we'll move on and talk about some technicals of the markets as well. We'll welcome Dharmesh Shah, the head technicals at ICICI Direct, for just that. Good afternoon. Thank you so much for joining us. Well, of course, we've seen Nifty at those levels of 17,190. Do you think we'll build on to those gains, or it could be volatile because it's the weekly options expiry?
Yes, good afternoon, Sunil. Yes, we have seen a good recovery after today's gap down opening. And we believe, I think so, going forward, I think so, looking at the screen and looking at the counter reading, it seems to be that market should eventually take out 17,200. And we should be looking for a target of around 17,450 to 500 in the coming days. Yes, after all this volatility, one thing is very clear that we have been holding 16,800 on all this volatility. So we believe, I think so, going forward, that should gradually move positive, and 16,800 we expect to hold and eventually target for the Nifty over the period of time by coming couple of weeks. I think so, really for the Nifty, we should be looking for a target of around 17,500 to 600. So yes, view is positive. Any dip towards 17,900 to 17,000 should be looked as a buying opportunity.
Okay. What about individual stocks?
Yes, as far as stocks are concerned, we believe as we remain to be positive for the capital goods as a sector, where Thermax again remains to be our top pick. If you look at Thermax, again the stock has been consolidating in this range of 1850 to 2190 for a long time, and that has witnessed a breakout with a strong volume. So we believe a consolidation breakout in Thermax likely to look for a target of around 2490, keeping a stop loss of 2080 for Thermax. Second stock which we like is in the consumption space. We like McDowell, United Spirits now. So the stock, again, I would say is not in favor for a long time. If you look at the quarterly chart, for last 5 quarters, the stock has been consolidating in this range of 950 to 750. And what we have seen in last 2 weeks, the stock has witnessed a falling channel breakout, supported by strong volumes. So we believe for United Spirits, maybe I think so, some bit of a consolidation cannot be ruled out, but over a period of time, we believe stock to extend this upside towards 848, keeping a stop loss of 712. So overall consumption, capital goods, PSUs and banking should lead the rally towards 17,500.
Okay, all right. Thank you so much for joining us. So that's a technical check on the markets. With that, we'll slip into a short break now. And up next, we'll be joined by Mohan Joshi, who is at Steel Strips Wheels, to discuss the business outlook. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Steady as it goes for the markets, but a couple of stocks in the broader markets which are in focus. Let's speak to one of the managements of that company. Steel Strip Wheels is in focus. The company recorded 10% sales turnover growth for the month of February on a YOY basis. Feb tractor sales also was up 52% in the month gone by. To discuss the demand trends and business outlook, we are now joined by Mohan Joshi, who is the head corporate strategy and investments at the company. Mohan, good afternoon. Thank you so much for joining us. Well, when I speak to you about your February numbers, exports are down around 26%, while the other segments have done really well. Can you tell us what is the export outlook? Because earlier when we had spoken to you, you did mention that Q4 will see the best exports ever. Is this something that will happen?
Thanks a lot for having me. I think you rightly pointed out all the metrics that I discussed last time. The Q4 will be the best export month for the company in the past 4 or 5 quarters. We started seeing a decline since September of last financial year. And that's always known to the world because of the situation in the US and Europe. And the Q4 should see the best of the lot from the PV side, from the truck side, and from the other off-the-road vehicles that we are trying to export now. And we feel that this financial year, we should do around 300 plus minus something crores, a small 5% here and there. And for the next financial year, we are targeting a minimum of 550 to 600 crores worth of exports. And we feel that that visibility is fairly indicative right now, led by our alloy exports.
Yes, Mohan, so you are saying that Q4 will be the best ever exports and FY24 exports will be around 550 to 600 crore rupees. What was the guidance that you gave for FY23? Because the earlier number was 600 to 650 crore rupees. And despite the fall that we saw in February, exports are still good in Q4 is what you're saying.
Yeah, so what I felt is that I think the latest earning calls that I indicated with the latest trends was in Q2, where we indicated the numbers to be around 450 crores. And the trend was still weak going into the Q3. The Q4 is, ending up with this month of March at a trend of close to 500 crores worth of annual pace. And we feel that the alloy addition and the rest of the existing business should take us to 550 to 600 crores for the next financial year.
Got it. So FY23 exports should be 500. Next year, 550 to 600 crore in terms of export sales, right?
I think for this financial year, it's going to be 300 crores plus minus 5%. For the next financial year, which is for 23-24, we are targeting 550 to 600 crores. Got it.
Can you talk about your overall top line then? In the first 9 months, you've done about 3,035 crore with EBITDA, absolute EBITDA of nearly 2,500 crore. How much do you think you will be able to end FY23 with, and any forecasts or projections for the next year?
For the first 9 months, as you said, we have already reached that number of 3,000 crores plus. For the full year, we guided between 4,000 to 4,100 crores, and we are in line with that. For the full year, we anticipated the EBITDA to be in the line of 450 crores, plus minus 2-3% here and there. And for the next financial year, we feel that we can improve this EBITDA numbers by close to 15 to 17% with the kind of growth that we are envisaging. On the top line side, I think 4,500 to 4,700 crores is what we are trying to eye for the financial year 23-24.
Okay. So that is about the revenue growth guidance. Talk to us about your debt, because on 30th Jan as well, you put out a release saying that, yes, 230 crore rupees is the current long-term debt. With the capacities that you plan or the expansion plans, what will the long-term debt look like by end of FY24?
I feel over the next 1.5 years, the debt should come to double-digit numbers. I'll not say a wipe out of the debt, because there is the expansion which is going on in this financial year, as well as next financial year, as well as the next financial year, to expand the capacities of Mehsana from 3 million odd to close to 5 million. And we feel that entire capex, which we are trying to plan right now, will be done up with our internal approvals. And any opportunity that we see in terms of debt reduction, because there is a hold in capex or a slowdown in the capex, and we see opportunities are less, will be diverted towards the debt repayments.
What's the outlook on your gross margins? I think your target was closer to 40%. What are the big drivers now on the margin front?
I think gross margin is a little tough thing, because raw material prices are just going all over the place. And I feel EBITDA is a better way to look at it. We are very close to 11% in terms of an absolute number, which is hovering around with a deviation of 20-30 basis points. And the aspirational EBITDA that we feel going forward is moving from this 11% to 11.5 to 11.75% going into financial year 23-24.
Okay, Mohan, I just needed one clarification, because the earlier guidance that we had on exports was around 600 to 650 crore rupees for FY23. Was that the correct number? And now that you're saying it'll be around 300 crore rupees, that's almost half of what you were expecting earlier. So you're still saying export.
I think I corrected that in Q2 itself. I think there is some misjudgment in terms of the last checking. I did it to 400 crores plus minus 10% in Q2 end. And unfortunately, we could not meet at Q3 end. And with the latest earning calls that we have given is 300 crores with the situation which is prevailing in the world.
Got it.
And which we feel is going to be at 550 to 600 crores the next financial year.
And this pickup in exports will be immediately from the month of April, or do you think it's going to be very back-ended? How do you see this export revenue spread out over the course of FY24?
So, for the Q4, I think we have seen excellent performance coming in from both US and the European side. And we feel that we are at the peak of the economic interest rate cycles. And going forward, the issue of inventory, which was a larger issue for the world, is sorting out, and inventory levels have rationalized themselves from 8 to 9 months to 3 months. So I feel every quarter is going to be a quarter-on-quarter growth. As I said, Q4 for this financial year is one of the best. And we are at a rate of close to 400 crores plus in terms of this quarter's annual run rate. And we feel that every quarter is going to be a gradual increase going forward to reach to the levels that I've shared with you.
Okay. All right, Mohan. Thank you so much for joining us and giving us all those details. So that's the word coming in from Steel Strip Wheels. Q4 is going to be strong for them, is what the management says. We'll slip into a break. Up next, we have a special segment, Midcap Spotlight. We'll focus on midcaps that are gaining in trade and are buzzing around. Stay tuned. Welcome back. Well, this is our special segment, Midcap Spotlight. I'm focusing on Coromandel International. The company has announced a new capex plan. It, remember, is an agrochemical company, and they have now announced a foray into specialty and industrial chemicals. The stock is higher on the back of these expansion plans announced by the company. They will be foraying into CDMO and expansion in crop protection chemicals as well, and will be investing around 1,000 crore rupees. That is for in the period for next 2 years for the above businesses. They say that they're bullish on all of the segments. For the CDMO business, they say they can develop capabilities across all the segments. And in the crop protection business, they will be setting up new multi-purpose plants. It is at their 2 manufacturing facilities. And this is apart from the purchase of additional land for future expansion. So they'll be buying land. They will be, setting up capacities across the value chain and entering into 2 new segments as well. So that is something which the street likes, some new product development that's happening at Coromandel. And that's why the stock is higher in trade.
Okay, 2.5% up on that. Well, we've got another one, and that's Craftsman Automation. This one is also on our Midcap Spotlight. Now, yesterday, the company held an analyst meet. It started at about 4 p.m. and post that, Motilal Oswal has written a note. And this analyst meet was centered around the company's acquisition of DR Axion India, which they did a couple of months ago for 375 crore rupees. Motilal Oswal says the acquisition is complementary. 1, there is limited overlap in terms of technology and customers. 2, it increases the share of their passenger vehicle segment. 3, it adds Korean OEMs like Hyundai as well as Kia. So Motilal Oswal expects this acquisition to be EPS accretive, resulting in upgrades for their FY24 and FY25 consolidated EPS by 14 and 11% respectively. They've got a buy rating on the stock with a target price of 3,925. Well, that's the update coming in on Craftsman Automation. This is some news that we are picking up on Hikal. Under the family arrangement, shares held by BNK had to be transferred to the Hiremat family. We'll try no monetary claims sought in this suit filed by the Hiremat family. We'll try and get you more updates on the background behind this. For the markets, still absolutely flat. So unchanged on the Nifty and the Sensex, but there has been a recovery from the early morning lows, as you can see, but unable to climb above that 17,200 mark. We got very close to those levels, but after that, we've retraced in the last 10 minutes. Out of time now on Midcap Radar. Thank you for watching Mutual Fund Corner when we return.